Hey everyone, welcome to second episode of Know Your Promoter. In this series, what we try and do is that we talk to the promoters of the company which are going to get listed very soon. Try and understand about the company, understand about the vision of the promoter and what the company is planning to do in the future from the fundraise. In this series, we have Aliasgar Hararwala with us, who is the MD of Paramount Forgings. We are glad to have him today with us, and we'll probably just not take a lot of time and get started. Just to set it up for him, the company manufactures steel forgings and is based out of Maharashtra. The IPO is open this month from 17th of September to 19th of September. With that, maybe I'll go to Ali sir and just try and ask from him if he could walk us through his journey per se, and then because a lot of microcap investing is about knowing the promoter and betting on the promoter as well. So maybe just walk us through your journey. How did Paramount Forgings happen in your life, and then maybe connect it with the journey of Paramount Forgings as well. That would be very helpful for everyone who's listening.
Sure. Thank you so much for having me here and speak about my company. So I'll just start sharing from the history how this company was formed. So technically, it started from my father somewhere in the year 1966-68. They started this company under the name of Acme, and it was a very small trading firm. Where three of them came together. My dad's cousin, his friend, they came together and they said, okay, instead of doing service and everything, let's start doing something. So they started off with a small firm and they were doing some trading of steel items, steel products, whereby they came across this product of flanges. So slowly they started, doing some buy and sell and doing retail, and they put up a small over the years. They put up a small workshop, as it must be just a small 100 square feet workshop. So in that they put up a small machine thereafter. They used to do small jobs for companies. So a little bit of supply chain which they had initiated on themselves. Uh, Slowly, as time progressed and with a lot of hard work, they kept growing over the period, and they developed the brand. They started supplying. Initially it was Burma Shell Refinery, L&T was there. So they got the entry over there, so they started supplying these products over there, and thereafter the journey actually began. So this is in the journey has started it's been a long journey which they have started, and it's like I've just entered the train wagon a little bit much later. So this was the first generation. Thereafter there was a second generation. My uncles got introduced into the business in the year 9. They came in well in 1970-75, and they, along with the entire team of the earlier partners, they started doing things business in a more developing manner. Slowly started getting more organized, uh, started working with other bigger companies, and slowly it kept growing. So however, this phase up to the year 1992-93, it was still very much in the trading zone. And it was mainly like getting job work done with other manufacturers and doing supplies and everything. So however, to progress forward, uh, we set up Paramount Forge as our brand, and we started our first plant at Kamote. That is it's at New Bombay. Was in the year 95-96. So we set up a closed die forging plant over there. It was just with one single hammer we started our journey of manufacturing. Slowly, over the years, in the next 5 to 10 years, we kept growing. We installed more and more capacity. So everything, whatever, you know, our whole journey, which has happened so far. So whatever we have profited, earned, everything. So it was always laid back mainly into the business, so that we have come to this level. Paramount Forge became a reputed brand since, as it started getting accreditations from all the oil and gas companies. We got registered with Engineers India and Indian Boilers and so many other organizations over the period. And primarily our entire range and everything, we were only involved into flanges, and these were all mid-small range of flanges. Thereafter in 2006-7, so I entered my entry into this industry came in from the year 94, 90, I think 93, 94 onwards. So post my studies, 95, sorry. Then when we started the Kamote plant, and from there I was always on the shop floor, So I was thrown out from the office and said made to sit on the shop floor and learn the processes. So it was the hard way, and that was the right way, in fact. So it was it was like an on-job learning, every process, every system, how the whole functions are there, what the product is, how it is made. So I mean, from 95 till today, it has been a very, very rich experience which has come through this entire process for me, right from the shop floor till marketing to meeting clients, developing products, clients, expansions, everything. So consolidated, I overall take a lot of pride in saying that yes, Paramount has helped me in my personal journey of my life. So now coming back is nine in the year 2006 7 we planned to set up another plant. Ideally, it was mainly because what happens is that in our particular existing plant, what we were doing in, say, when we started in 95, 96. So this was a closed die forging plant which could cater from jobs right from 1 kg up to 100 kgs.
Got
Now,
it.
in order to sustain and grow the business, so we needed to ensure that we not only technologically advance, as well as we do a wider range of products, because we used to miss out on most of the requirements which were of high value addition, lesser volume, and so the economics of business was changing. So if at all we did not get into that space, we would have probably been out of our space also over the years. So we planned and to set up a ring rolling plant, and we started work on that project since 2007, 2008. It was anchored by my uncle, but unfortunately he passed away during the terrorist attacks. So we had to stall the project. So thereafter, again, we restarted the project. And 2011, we commissioned this plant. So this is a ring rolling plant. It has a different technology of forging. It's more advanced stage of forging, which fewer players in India have. And our the range of jobs what we can do is right from 100 kg up to 4 metric ton a single piece. So we entered into this space, and thereafter we slowly kept developing the plant, adding up more infrastructure, machining centers, every possible ancillary equipment which is required. And this what happens is that our industry is a very capital intensive industry. So every machine, every equipment, every this thing what you buy, it's the cost, the basic costs are very high, and these are recoverable over a period of years when you look at it. However, so as you keep modernizing, you start progressing into jobs which are of, a little bit of higher value addition, more critical in nature. Thereafter, our journey began. We slowly introduced a lot of products. We kept doing a lot of research development into the plant. So from the regular flanges, we came into the non-standard forgings. We could do a lot of non-standard flanges, which specific customers require. And these are mainly used in the pressure vessels, equipments, heat exchangers, and various other industries. And similarly, a lot of ring flanges, rings, these are used in other industries as well. So primarily, our entire business initially was only towards the oil and gas, petrochemicals, and those sectors. We grew in not only in terms of revenue, in terms of products. We kept introducing and developing more products. So over the years, we diversified slowly from the oil and gas, petrochemicals. By introducing these products, we started getting into the equipment divisions, pressure vessels, heat exchangers, as I explained. So these becomes all non-standard in nature, and these are all customized. And thereafter, again, the other heavy engineering industries. So we make gear forgings, gear blanks, and several other products. So in today, uh, we not only deal with a range of products, but we deal with a wide range of metallurgy as well. So metallurgy in the sense of various grades of steels, right from the regular carbon steels to low temperature carbon, alloy steels, uh, stainless steels, all particular grades, duplex stainless steel, super duplex, nickel alloy grades. So these are all as you keep developing your plant and you keep working. So these are all high value added steels, and these are very much critical in nature, which require a lot of quality consciousness. They require a lot of stringent quality systems to prepare and supply these forgings, and they go through a various range of procedures as well as tests. So, sum and substance, I mean, this has been our journey so far. Now, uh, we've with this IPO, we plan to expand further, uh, deepen our footprint into the existing industry, as well as keep growing. Yeah.
Got it. Thank you so much, Ali sir, for covering it. Kind of sets up the next 15 minutes really, really well, where you have kind of taken us through the complete journey. And yeah, I completely agree with you that the best way to learn is to go on the job. And having seen that you have been working for so long, so I have a lot more confidence in the company. But yeah, maybe I'll ask you a few specific questions before handing it over to Yash to talk about a bit more about the financials. But just wanted to understand from you in the current setup, how much of the revenue comes from these standardized basic forging products like flanges and ring rolls versus how much of it is from specialized products like, let's say, self-reinforced nozzles, etc.
So, so what happens? Technically, everything is related to piping. Now, flanges is a regular product. A non-standard forging or a flange is also a flange. So when we look at it, on a consolidated level, so 60 to 70% of the revenues come from the regular flanges. Thereafter, as we split it up, then it will run in separate non-standard flanges will be approximately 10-15% of the other share. Then there will be other products which will cater to 10 to 15%. So mainly when we look at it, if you see it from the industry perspective, it is we are very heavily dependent on oil and gas, and uh, for another 5-10 years, oil and gas will dominate. uh, we also work with on the renewable area, renewable energy, because again for the entire green hydrogen or whatever you call the other projects which are aligned, there also these particular components are required.
Got it.
So our intent is to slowly reduce over the next 5 years our dependence from the oil and gas stream. We are working with infrastructure companies, we work with heavy engineering companies, and we intend to gradually, as we keep expanding, keep growing our product portfolio and the output as far as the production and tonnage is there. So we are not looking to reduce our volumes from the oil and gas sector, but we want to increase our sales and output from the other sectors which I've mentioned. So now post expansion, we will be then focusing very strongly on the defense, aerospace, and all the other industries which are
Got
more
it.
critical in nature. Yeah.
Got it. One more question from my end. So I was looking at the unit economics. Can you walk us through the unit economics for every piece of specialized product that you do or general product that you do? How much of it is raw material? How much of it is labor, etc.? And one follow-up question, which I just want to set it up. I was looking like the revenue earned from scrap was like at, let's say, 11 to 12%. How is it comparable to the industry per se? If you could give us some insights on that, that would be helpful.
Yeah, so what happens is that various industries now, whatever data you will get, ideally, it's everything's related to automotive, because 60 to 65% of the entire industry data which is shared, or the companies which are into forging, they are primarily into the automotive industry. So the automotive, it runs on set percentages, set margins, set everything is set preset. So it's just about the volumes. Whereas our industry is very different. It does not work in that manner, because volumes may be there, volumes may not be there. the quantity, the criticality of every component is different. So there is no set parameter on one particular job. Ideally, when you look at the forging, because forgings are made from various processes. Now you can say it is made from a closed die forging, it can be from open forgings, it can be from ring rolling, and it can be again, a little bit modified die forgings. So, whereby your weight ratios keep changing from every product to product. So, certain places you may have, say, maybe 40, 50% of input material, somewhere there may be 55, 60, it can vary. So that depends on what product you do. Scrap sales mainly are higher in volume. Is the reason is because we do a lot of stainless steel jobs and high value steels in the plant. So that is the reason. The byproduct also, it is a revenue generator, and it is also a part of the pricing component for every manufacturer. Uh, that is one of the major reasons why the value is higher. Rest, the other industry specifics, if you're looking at, as I said, about automotive and everything, so mainly they're doing alloy steels and carbon steels, which are much lesser in value in nature. So that is one of the reasons of higher sales on scraps. Yeah.
Got it. And like, what is the average duration of order? How long do you take to process a order? Do you is there any clause in the contract where the raw material price escalations are passed on to the client, or is it something which you handle the risk, and how do you manage if
No,
you
that
keep it with yourself?
No, see what happens. We have all end-to-end contracts. What we are dealing right now, what we work with are, you can term it as short-term because they are, order-based, requirement-based rather. So these orders are technically, they are frozen once you negotiate, and they have to be supplied in some particular duration of time, which can vary from 4, 6, 8, 10, 12, 16, or even 18 weeks. So these are the various durations of different kinds of orders, and it depends again on the entire process, the nature of the job, how it needs to be done. So, and the quantum and the value, accordingly these deliveries are expedited then.
Got it. Over to you, Yash, for your questions.
Thank you, Manish. Sir, can you tell us more about who could be the peers of Paramount Specialty Forging? Because we could not see any name in the RHP.
It's because mostly there are very few very listed companies. In fact, myself, I am not very clear about how many listed companies are there. I know one about Hilton Metal Forges there. They are listed from quite a long time. The other companies from our mostly which are non-listed and are in the competitive businesses are CAW. Then there is one, there is Good Luck, there CD Engineering. So there are these certain companies, but they are unlisted companies.
Okay. And sir, as you said that our inventories are order based, like you take the orders and then you deliver the product. So what will be the current order book for a company, and uh, how do we accommodate for short-term raw material price escalation?
So current order book would range between 40 to 45 crores. Uh, what we do is we usually, we do not hedge long for the raw material price escalation or de-escalation. So technically, when the orders are booked into the system, we are usually placing those orders. Certain grades of steels which we need to have some inventory levels, for quicker processing and standby. So we have those inventories always, keep continuously replenished in that
Okay.
manner.
Understood, sir. And sir, also about your capacity utilization, in RHP it is mentioned that we are at currently 40% capacity utilization. And in what terms are we measuring that capacity? And if we talk about the overall unit of the company, what is the usage?
So when we look at capacity, the capacity is defined in two parts. Whenever any plant is defining its capacity, ideally it will be in terms of the production, that is in terms of metric tons output, right? So that is the forging capacity. The second part comes is the most important, is that since we do not deliver forgings as such, so the second part is the machining capacity, that is the processing capacity of the plant. So for example, now today the reason why it is 40% is because we are running one single shift. We're not added another shift because our processing capacity is much lesser. So compared to the output of the forging capacities. Now, say for example, I'll just share in just some layman terms, is that if my plant is producing say 20 metric tons a day, the product processing capacity of the entire facility, would be approximately, to process this 20 metric tons, it will take the plant would be in a position to process 3 to 4 or 5 metric, not more than that, per day. So as the days keep increasing, because forging, the process is much faster. Machining, what happens is that there are various stages involved. There is rough machining, there is final machining, there is drilling, there is inspection. So all of these processes, they require a certain significant amount of time. So the entire objective is again to boost the machining capacity to bring it to the forging capacity levels, so that the output of the entire product is much faster. So today, for if a job is lying at the plant after manufacturing for 15 days, 20 days, 30 days, you know, that the turnaround time will quickly start changing right from there to equivalent amount of days from the manufacturing there. Yeah,
This is with the proceeds of IPO funds that
absolutely
will increase the machining capacities. Correct.
true.
So is it right to assume that it will also increase in a turnover? It will also help in increase in turnover as we are rotating the cycle much quicker than what we were used to. So it is
Absolutely.
kind of backward integration into processing that we are able to make finished goods early and deliver it to the clients.
Very true. So what happens is that we not only deliver quicker, we can take more orders. Secondly, if you see, the cash flows also will completely change because of that.
Okay.
So that the number of cycles what we can do, it will become much faster. The number of order repeatability will be more. With this, it will keep changing the entire business course, as well as the uh, it will set the entire business into a different momentum.
And so, till FY26, will we able to ramp up the utilization to optimal levels?
So if you see the RHP, I mean, the expansion what we're planning to do is in two phases. The first phase is to ramp up the machining center, which will immediately show the results, say maybe by FY25 end. And the second plan is to increase our forging capacity also by modernizing the forging process. So we are doing forgings through open forging, through closed die forging methods on pneumatic and air hammers. We will introduce forging presses, so that will change the dynamics on forging. It will reduce the cost, it will increase the productivity. Thereafter, we will introduce another forging hammer, which whereby we have a gap of the volume gap, where it will bridge the gap between the first plant and the second plant. So that particular hammer will again help us boost a lot of productivity as well as value. So the flexibility to take more diverse orders, larger volume orders, it will keep increasing with the plant. And parallelly, we will keep expanding further and further into the processing centers also, to make it, more and more apt to quickly deliver the jobs.
Okay. So we also saw in our RHP that our working capital for FY24 has almost gone up by 100%. It was around 11 crores for FY24, but our revenue is somewhat the same. And we can also see some cash being stuck in our inventories. So can you please enlighten us about these 2 points?
Yeah, so as I explained earlier, what is happening is the amount of processing time it is taking to complete orders, it's much, much higher than estimated. And because of the gap in the machining infrastructure, the jobs are delayed. Now, certain jobs, say for example, when we are shipping to the client, if certain jobs are stuck up, the entire shipment gets stuck up, right, from exports to domestic. So that is one of the major reasons why the inflation on the inventory levels has happened. So with the next 1.5, 2 month, we'll significantly see the entire drop down in inventories. And over a period of say maybe another 6 to 12 months, we will try to bring it to the minimalistic level. So we are running a very very healthy cash flow. So today
So
primarily it's like a stuck situation.
yeah, correct. So also we saw that operating cash flows for past these years have been negative. And could you explain the reason for being negative? And if you can explain like how do we foresee our operating cash flows coming in, internal accruals coming in, and what will be the, if you can maybe in the percentage of PAT, what will be the conversion rate of PAT if there are any trends in your mind?
So as I now again see, each and every question of yours gets interlinked towards the processing and the dispatches and the inventory levels. So everything is interlinked. The moment the thing is what has happened till today, to add, as I said, the adding up of the infrastructure, these are heavy capex items. So objective to uh, add the equipments for processing and everything through the IPO is to see to it that the the boost in the infrastructure is there, so that this particular uh, you know uh, a lag into the whole system, which is increasing the increasing the deficit cash flow or the process times, the lead times. So this is just coupling and multiplying over the last so many years. Now, in order to decouple that entire activity, the entire infrastructure as well as people, resources, everything is beefed up into that situation, so that we do quick turnarounds. And PAT would obviously it will start changing very significantly once the lead times in decrease. So profitability from various different kinds of orders, uh, it healthily improves when you are always in time. So if it makes it a lot of it adds you a lot of benefit also in gaining more orders, as well as increasing your profitability from the system, because your system and your process starts giving you the extra margins.
Correct. Correct. So, sir, coming back to what you said, that margins will also be better given that we are also into expanding our capabilities in machine processing and etc. etc. So, sir, are we confident enough that the similar margins, 9 to 10%, will achieve PAT margins uh, in future?
We should be, because now slowly we are also getting into a little bit more of complex jobs, whereby delivery lead times would be shorter. So the plant will be more geared up to do jobs which are a little bit complex in nature, which will give more revenue, a little bit of better margins, where lesser players are involved. Plus, we are also looking at securing certain long-term contracts to run the plant at base at a little bit of a higher efficiency level, so that the overall costing will slowly start coming down.
Okay, understood, sir. Thank you, sir, for the answers. Over to you, Manish.
Yeah, I can see Yash has taken almost most of the time. So I will keep it quick. Ali sir, you have been very helpful and generous with answering all our questions patiently. Just wanted to check with you, and this is not something which you definitely need to give, but again, is there any guidance from the management in terms of like what is your vision for the next 3, 4, 5 years per se? I don't need numbers specifically, but what do you think you want to take Paramount to?
So currently, where we are in our space, we would always, the first objective is to become amongst the top five in the next 2 to 3 years. The top five brands in our space in India. Post this expansion, we are again looking forward to adding up more infrastructure. However, that will come. We'll start working on that particular area a little bit later on. Post, once we successfully complete all our current uh, current whatever objectives we've set for. And the thing is that we want to make our presence felt in every particular sector, and the brand itself, we have developed it up in so many years. It's a reputed and recognized brand everywhere amongst all the peers, as well as the entire industry where we are catering to. So for us, the scope of growth is much bigger, is because we are relatively very small into the space. So for the everywhere I only can see an upscale or an upside. And definitely within the next 3 to 5 years, we see ourselves very, very prominently placed amongst almost every sector. Because if you look at it, forging is a sector which is so capital intensive, and it is present in every particular line of work, right? From your automobiles, your manufacturing, your infrastructure, your uh, railways, defense, aerospace, your oil and gas. So each and every place, your forgings are always going to be required. So we would put our presence in every area, and we'll keep expanding our plant as well as our capabilities and take it to another level so that, we can try and, achieve the best of the facility as well as the products what we can cater to.
Thank you so much for covering that. Last two questions from my end, very quickly. Just wanted to understand from you what are some of the risks that you feel are associated with the business. I understand the safety of the workers would be one part of it. Have there been any incidents per se? How do you ensure that? Because it's a slightly risky environment to work in, so how do you manage that? And any other risks that you particularly look for? It's important that we kind of talk about them when we are talking to the prospective investors.
Absolutely. So yeah, I mean, see, manufacturing itself, it is high risk, no doubt about it. But we try to make sure that safety is our primary concern. Our plant is also certified under health and safety, so it's certified for ISO. It's certified not only for the environment also as well as ISO 45,000, 14,000. We see to it that we are trying to increase the automation in every process and reduce the risk of the man-made error so that there can be incidences. We always try see as far as any major incident is there, it is not there. However, there will be some minor incidences of hurts, but those are also again taken seriously and they are attended to so that it we it can we try to keep explaining it and training through workshops and everything for however the lowest frequency of accidents are there. But yes, obviously it will always the industry is such where there is a risk always involved, but we try to mitigate it and lower the risk by using more equipments, lesser of handling of the auto jobs.
Got it. So, sir, you have kind of answered all our questions. Just wanted to check with you any departing words that you have for the prospective investors. There will be a lot of investors who will be joining the journey with you. And as I say, IPO is not the end goal, it is just the starting of a much bigger journey. So, anything that you want to talk to, tell your prospective investors on what your vision is, why do you think they should join and apply for this issue?
Uh, the thing is that see, we're very committed as far as our work is concerned, and our focus is very clear. We've always, as we have grown, I have explained our entire journey to you. So we've kept growing over these years. Our journey is to see to it that we become a very, very strong and prominent player in almost every particular area of our business. And we would want every investor who joins us and shares the same vision of growth and join along and help us along with the whole journey of growth to see to it that we build a much bigger and a stronger brand which is recognized all over the globe.
Perfect. Thank you so much, Ali sir, for talking to us. I'll just repeat some of the basic information. So, Paramount Specialty Forgings is coming up with its IPO. We just spoke with the MD of the company. The IPO is going to open on 17th of September and is going to open for 3 days and will close on 19th of September. So, make sure you look at this video, understand the risk angles, and also read the DRHP. It's a very well covered DRHP. So I want to congratulate you on that for covering the DRHP in detail, and then take a decision, take an informed decision. Thank you so much, Ali sir, for talking to us. All the best for your IPO.
Thank
Thank
you
you
so
so
much.
much, sir.